Good afternoon and welcome to the FX Daily Wrap-Up with ForexAnalytix. And we're just taking just a quick overview of where we are today. Obviously, we've seen the dollar continue to do a slide, as Blake mentioned on the Face webinar. A lot of this move didn't matriculate until once we got into Asia. The dollar was paring back. I think Powell probably as receptive as he could be, although he was non-committal, but it's really the market that has decided that there's going to be a cut. We've been seeing this, why it was priced in. We talked about it 3 days, prior, the prior week for retail sales. It was priced in as much as 28% a cut for this meeting. Of course, it went down with the retail sales, but we've seen practically every single data piece, no matter what someone says, every single data piece has been pretty much weaker. Now, falling out of bed, no, but definitely weaker. Whether you point to the PMIs that were the worst since 2008, the New York, most recently, just was it yesterday, the New York manufacturing index, the worst drop on record. Everything points towards that, and we've seen slowdowns. Now, like I said, it's not based on what we have right now. It's based on what the possibility can be, because as the issues with China continue to linger, that's causing an issue. And this is, you don't wait till the house is on fire to call the fire department. Okay, when you smell smoke, that's when you call the fire department. Okay, so enough of this silly business that everything's okay. Relatively speaking, yes, the U.S. is in great shape when you compare to the rest of the globe. But have things been slowing down? Yes. So henceforth, the market is pricing in that likelihood of the cut, and why we're seeing the dollar then going and pair back. We're going in into the cash dollar index. It's going to be interesting to see the type of move that we can get here. And that's the big concern here with the cash dollar index. And you have to be wary. Look, I've said it before when we had the move initially here. Look, it's not so much about the euro. People are going to be poo-pooing the euro. And how can the euro be rallying if Draghi just said all this stuff? And they're going to, well, it is rallying, folks. Okay. But it's a proxy, so to speak, de facto for the dollar, because it comprises 56.4% of the cash dollar index. So, folks, people are dropping dollars because they expect us to go on a rate, not just a rate cut, but generally a rate cut. You see extended cuts beyond that, not just one cut. There might be little news in between. Trump says him and Xi Jinping are going to get together and this and that. But, like I said, we've already been smelling smoke for about nearly 2 months as far as data starting to weaken. And if everything was hunky-dory beyond that, then maybe we could get beyond that. That'd be okay, and no cut needed. But this whole thing with the tariffs, against every single country that you can think about, I think he probably has a tariff against Uzbekistan if he probably has one that, for there too. So that's what the market's looking at. And it's this uncertainty, and it's causing a slowdown. And we're seeing that in the data. So what I was saying is going to be interesting. The knockdown here is because we've had, we finally broke above this 97.89, and then we got knocked back. We finally broke, and we started to slide back. We finally got back up again. Best close so far, you can see that. And then whang. And then we got above the trend line, and it wasn't easy when they did, but they make this boost and they're thinking, oh, well, the dollar's coming back. But it was really an opportunity to get out of dollar positions. And a lot of big managers I had seen, they were positioning themselves, and I'm talking about whether it be Paul Tudor Jones or several others, were positioning themselves for the longer haul to be selling dollars. And so on the basis of this whole rate cut thing, it's not just going to be one rate cut. Now, whether it's a rate cut in July and then a rate cut again in early fall, and maybe eventually another one later on, but it's going to presage that. And once again, it's not like as if the dollar index is down here. The dollar index is up here in the stratosphere, and that's why the risk is that we could get a slide on this. And generally, when you get that expecting a rate increase, you can expect to see a pretty good fall. And I'll give you an example. One of the gentlemen with Real Vision TV was saying he was buying the dollar. He's buying the dollar because there is going to be a cut, which to me didn't make no freaking sense at all. And he pointed out over the weekend, plan what had happened at that time. And he mentioned that at the time, and you have to go back on a weekly chart, so I don't want to spend any time on that, but it's around 2001. And in January, he mentioned how the Fed had cut on January the 3rd. People didn't realize it and so forth, and the dollar eventually rallied. He is correct. Look at it on a weekly chart. It did rally. But guess what? Presaging to that cut, the dollar index had fallen 1,000 ticks, not 100, 1,000 ticks. Yes, eventually the dollar did go and rally, but that's after it fell 1,000 ticks. So 1,000 ticks from here would put us at 88. Okay, so that's what I'm saying is, and so we're looking to see if this thing will go on and continue to fall even further. And you don't want to get in the way. And I stepped in the European session, took a short. Actually, I came in Asia, and fortunately, I was able to jump out real quick for some small minor pips. But here's the concern that we have going into tomorrow. You got to be very, very careful, because once this thing does start to get some real momentum, we can really start to slide, and you do not want to go get in the way of that thing. Just go back to, if you want to look on a weekly chart, go to 2001 when it presaged that rate cut, and it was just like, it was torrential. It was at the cash dollar index, I think it was at 118 and fell all the way to 108. And I think it was within 8 weeks. And we did fall a little bit after the cut, and eventually grouped itself and eventually rallied, but that was well after the cut and well after it had already fallen. That's really my take on this. We're going to take a look here with the euro dollar. I'll keep it relatively short, but I wanted to go and touch on that because I think that, Blake made a good point about that on face, is that, be careful. I think he tried to caution as much as he can. Blake made a good point. Hey, I've been guilty of the same thing. Is like, you see the market one, you're thinking, okay, I think I'd buy it. And you go, whoa, look where it's at now. You got to sell it. Well, one of the things that the euro's done this morning is really diverged, just the same way I said about the Australian dollar over the last few days. The euro has diverged from the dollar index. So even when the dollar index has tried to pop up, the euro is held basically like a rock. And so my thoughts are, is this market is not going to be satisfied until we get to 1372, which is confluence with 1377 to 38% of the move from 1108 to 1813, and the 78%, which is the 1108 to 1448. So I think this is where the market will go. We may see a pause around the 28-ish area, but this market looks hell-bent, and I would not be getting in the way. And on a stream move, which we thought we were going to get potentially the last time we were up here, could take us up to 1389. But like I said, if you're looking for targets, there's your target. If you're hell bent to short this thing, I really wouldn't be touching until we get towards this 1389. I'm saying hold it. Yeah, you can scalp for a little bit here and there. I did myself, but you got to be very careful. And boy, you got to have a tight stop to boot. That's really the key thing I'm going to go and focus on. Obviously, the dollar cat has continued to fall out of bed here. Talked to some people in the chat room about that trade, and boy, it has really come undone. Cable is still here, still pushing a little bit higher. I did see where they have narrowed the contestants to Boris Johnson and Jeremy Corbyn. We do have low resistance level coming up. 38% comes in at 2763. I didn't think it was going to make it up there. I'll be honest with you, I don't even know what I had for the bias chart resistance. We'll take a look. We had 2734. Okay, and the high was 2727. Okay, not bad. But this one you got to be really careful with. But it is very oversold. I mean, but depending on how this thing, we can easily, I think, make it up to this 2763. I don't think we make it today, but that's a good area right here, which is at 38%. And you can see some nice, this touch is coming across here. This is where the market got a little bit overdone, but quickly came back. So this 38% may be where you're looking at. Aussie dollar is still doing very good. We talked about this over the last few days. Remember I said that once we got past that, I thought that this was going to outperform most other currencies because I felt, even though it had been going lower, it had positively diverged even when it was falling. The same way the euro has positively diverged even when the dollar index, the dollar index is working lower now, but even when the dollar index was trying to make a stand, the euro just didn't want to pull down. It pulled down a little bit and quickly popped right back up. The only other thing I'm going to touch in, we'll go in and get to the economic reports coming out this evening. You can see here we have manufacturing data coming out for Australia. That's going to come out at 7 p.m. Eastern, 1800. I'm in Central, so that's 6 p.m. for me. Manufacturing services and composite PMI. Okay, we might even get a further kick. We're looking on the Aussie, potentially get up here to 66. Actually, that's on the New Zealand dollar, so I do apologize. I'll pull up the Aussie dollar. And Japanese CPI. Now, more importantly, where the the euro may pull back a little bit, if you're thinking about that, is we do have European PMIs tomorrow. Right here, start off with French PMI, which actually it's still held above the contractionary mode here, but the German PMIs, holy smokes, man, it's just been going down, down, down. You know, you got to, you know, hear the submarine horn honking, but it's been down, down, down. It'll be interesting to see if we can get this thing to pull up just a little bit. But as I mentioned, French PMI, German PMI, and Eurozone PMI, it's under 50. So it'll be interesting if, you know, it's almost like the euro wants to go no matter what. So if this thing pops up above 50, I doubt it will, then that'll end up pushing the euro even higher. Obviously, Draghi, to a certain extent, they feel boxed in the ECB where they feel like they have to do something this next month. If we pop up above 50, they may not want to, or at least the case would be made why they shouldn't. And then coming in tomorrow, we do have Canadian retail sales. Dollar CAD has been whacked pretty good, but you know what? Like I said, one of the things I made the case was that the employment data has been just nothing short of fabulous the last couple of months, and why I thought that the Canadian currency could get stronger, and what we've seen the dollar CAD really come under some kind of a pressure. We also have market PMI tomorrow here in the States at 9:45 Eastern. So that's what we have as far as for data. But like I said, the one thing you'll want to focus on will be, if you're trading into the Asian session, is going to be the manufacturing PMI coming in for Australia. Let's move this out of the way. And here we go. There's your Aussie dollar. And here's where we have our bias chart resistance. 69.41. You can see it coming across here. We can take a look to see if that's going to confluence with the fib there. The most recent high. 69.50 would be the 61%, and we're looking at 69.41, this level here. So maybe we can bop up there a little bit. We shall see. Another market we want to go and take a look at right now, one that we generally don't or have not looked at in a very, very long time, and we'd probably be remiss if we didn't mention it, is going to be the gold market. And I haven't tracked this thing in a long time, but I had mentioned over the last couple of weeks that I thought that this market could take off. But that was based on my whole thing about the rate cuts. And I really did believe firmly about the rate cuts. And one of the things I'd mentioned about gold is that it had, you know, we had been moving higher. And then whenever the dollar would move lower, we get a little bit of lift, but not much. And then I made the case back in, I guess it was December, January. Hey, this is really a good asset class. When you look at the, you know, the S&Ps are so high. I'm sure some people are going to shift some of their assets in a little bit into gold. That'll provide an undertone bid. I think at the time it was trading like in the 1240s or something like that. But even then, we did move higher, but nothing to, as they say, nothing to write home about. But the interest rate cuts or the potential for interest rate cuts, hey, now that's lighting a match inside a gasoline shack. And boy, this thing has gone gangbusters. And has really moved higher. I know some people had tried to short it. I remember cautioning them at the time. I remember when gold was trading at 13.16. I don't know if it was a Monday we came in, and some people were taking shorts against it. I go, hey, be careful. This thing wants to go to, at the time it's at 13.23. And it can go higher. And I was pointing about that 13.30. And well, That was a long time ago. Look at this thing. It's been blazing, blazing, and blazing, and it looks like it really wants to move higher. So really all about rate cuts here with the gold market. Great call by Blake. He was talking about this thing moving higher, and boy, he said it's going to be gone, and gone she is, like the horse, the horse that took off, and too late to close the gate. Horse is a quarter mile down the road, and it ain't coming back, and that's the issue here with gold. We've come a long way, so it doesn't mean we can't pull back a little bit, but like I said, this thing is going to be going and going and going. I guess we'll take a quick look at the cross rates. EURUSD has stayed relatively quiet. I did point out this in the European session. Let me take a look at this. Looks like we have a head and shoulders here. You see that? That'll be some kind of a drop. And we talked about how the Aussie is really oversold. So take a look at this. What if Trump and Xi Jinping do work it out? You know that Aussie is going to take off like a scalded dog. And so you can imagine, and you've got here, it seems to be a nice setup on a head and shoulders. It's on the 2-hour chart. See that right there? Certainly would augur for a nice move. What is this? But it's almost like 64.50, and this is 62.78. So almost 200. So you'd be looking at 60.78, maybe 60.95 down here, right around this area. So it would make sense down here. I mean, potentially as far as a target. I mean, sense as far as where it would find a lot of buying power would come in right there around that 61 even. The guppy has kind of moved here, but there's really no news, nothing big. We can see here the euro on a 5-minute kind of paring back a bit, but to me, like I said, I mentioned that gun to head, I'd rather be buying the euro. And what I was referencing to, because I was stating is the percentages waiting to decide. It reminds me, as I've mentioned several times before, it's like the dollar index that was 2.5 months ago. It didn't matter where you buy. You could wake up, scratch your head, open your eyes, and just hit the buy button. No matter where you hit it, whether you bought the breakout, whether you bought the dip, whether you just spun around in your chair and just said, what the heck, I'm just going to hit the buy button. You kept getting paid back with the cash dollar index. I think that's the case with the euro now, and not so much because it's the euro, but because I think we're going to see that liquidation with the dollar index. And you really have to be careful on this thing. Be careful tomorrow in tomorrow's trading. That's all I've got here. On here, we'll go on and just take a quick stab real quick on the main screen, and then we'll call it a day and get the heck out of Dodge. I think pretty much everybody's paired back. So if you're looking here in the cash dollar index on the 2-hour chart, this is a pretty decent area right here, this 96.60. If they spook them tomorrow, I like this 96.30. That would take out the stops here, this 96.30. We'll see tomorrow if you're with us. If you're a member of the ForexAnalytix, you're able to go on and catch us live at 4 a.m. Eastern for the European crossover webinar, where we point out our bias chart resistance levels, basically short-term trading scalp levels. Obviously, we had the euro here at 1302. But like I said, we'll go on and have that if you are a member. If you're not available at that time, Stelios records it to play an hour before the New York Open, probably about an hour and a half before the New York Open. But thanks for joining us here on the New York Daily Wrap-Up. Have a great day.